Your return in 2020 was 160%.
Mhm.
So what happened all of a sudden?
That was, you know,
Hi, everybody. We're back. It's another Rising Star show today, and I'm excited. Michael, in the house. Thanks so much for coming out.
Tom, appreciate it. Thanks for having me in the new studios. They're awesome.
Oh, great. Well, you haven't been out here before.
No.
But as we were just talking, I remember that we met, I don't remember how many years ago it was, but it was before the pandemic.
Oh, yeah. Probably eight or 9 years ago.
Probably 8 or 9
I
years
just actually think I don't remember.
Wow. I had thrown a pop-up dinner in Washington, D.C. I was giving a speech at the CIA, and I threw a pop-up dinner that night, and you were one of the ones that won the invite to
got
dinner.
the email.
I didn't even realize it also until like 3 seconds ago.
Yeah, sitting there.
So that's awesome. Well, thank you for coming in.
Yeah.
And
Looking forward to it.
looking forward to hearing your story. Now, what struck me is when you first came in, you said that you were teaching at Georgetown. And I was like, okay. I remember having somebody at dinner that I was talking to that was teaching a class at Georgetown. And so I can't believe it's
One and the same.
So you started watching Tasty in 2012.
Yeah.
So it's been a 12-year relationship.
We're
We're like family, right?
In a way.
Yeah.
You share a lot more about your lives than I have with mine, I guess.
Yeah. Well, but it's cool, and I love the all that history there. So you know plenty about us. To give everybody a little background, because I'm not sure what's popping up on their screen, but civil engineering degree from Virginia Tech, master's in finance from Georgetown, and one of the key that they have marked for me is that you are the proud owner of a numbered cherry pin.
I am. Well, I wore it here today. Back when
I think I have a cherry pin on right now. Yes. Nice.
Oh, and opening an account, that was one of the things that you got back then.
There you go. And you wear it proudly. I like it. And before we get into kind of, some of your results and some of your stuff, I'm really fascinated by, so you're an engineer. Mm-hmm. You're an entrepreneur.
Yeah.
And you're also teach at two universities, Virginia Tech and Georgetown.
Correct.
So you're kind of like a techie engineer, and then you've got all this other entrepreneur stuff going on, mm-hmm. in addition to your trading. How much time do you spend watching markets?
I was telling some of the team out there this morning. I'll have the live show on almost every day for the first 3 or 4 hours. There's always a screen that I have up that has my account on there just to watch.
Nice.
Yeah, we can get into the trading a little later. I don't trade all that actively, decently so, but it's an awareness thing for me. It has so much context in a lot of the work I do outside of trading.
So what does that mean? I mean, explain.
I'll go on a little tangent, but I'll answer your question.
Sure.
In the one of the graduate courses, it's a Foundations of Finance. I mean, NPV, formula, basic. Let's talk about time value of money.
Okay.
And we have a discussion about what sets the time value, interest rates. Where do they come from? How are they set? Who determines them? What's the pull? And it probably wouldn't surprise you, but the vast majority of students, don't have that context to the bond market and have never traded a bond or note and don't know what any of the spreads are. And, it's the interest rate's just something the bank sets. And, you get into the next question of, well, where are rates going? And, well, I don't know. Well, actually, there's an entire market that's predicting it.
Do you tell your students that you trade the markets?
Yeah, we get there.
You get there?
Yeah.
Okay. Because I think it probably, I wish I had professors that I don't know how easy it would have been to trade back then, but I kind of feel like I wish professors would trade, and then I wish they would tell the students that they trade, because that it means a lot more.
I actually, true story, in an undergrad class, I actually had a student come and ask if I've ever heard of Tasty Trade and Tastylive. he was a watcher and was just started trading.
Great.
And when we started talking about options, it piqued his, he's like, wait, I know that. Let me come talk to you about it. So yeah, they're out there. Yeah, but the context, you have to try to put it in perspective of whatever environment we're in. And especially in real estate, which is a lot of the focus of what those master's classes are on, it provides that.
Yeah, the only problem with real estate
There's many problems. But
well, yeah, I guess. um, as somebody who's trying to sell a building right now, sure. But one of the great things about trading for me is that it's actually something that it's actionable because of the liquidity in the markets. Mm-hmm. And real estate, as much fun as it sounds like on paper, sometimes it's not actionable because there is no liquidity.
Yeah.
So it's
correct. You could have the best building in the city, but if you can't transact,
that's
it doesn't
right.
matter.
You're so dependent on unlisted financial markets, well, even non-listed markets. They're regardless of what's happening, there's a bid and an offer. Mm-hmm. And there's some markets somewhere.
Could be wide, but there's a market.
Well, or it could be very low and unattractive. It could be high, but there's a market. There's not always a market in everything else. And so the concept of liquidity is quite foreign to a lot of people when they think about taking risk. And that's one of the things I just love to hammer home, to providing context in your teaching. Do you think that trading has played a similar role in, the entrepreneurial ventures that you have and in the engineering side of the business that you're a principal in?
Absolutely. Trading has taught, I don't want to call it instant decisions, but instant decisions. Like you have to make, with the information you have, with the risk you're willing to take on, do you get in a position or not? That is every day of owning and running a business. And
assessing risk and making quick decisions is something that I preach nonstop, but sometimes people have a hard time hearing that and actually wondering how they're going to apply that.
Yeah. There's decision paralysis on so many things in life. You can't have that in running a business. Doesn't mean you're always making the right decision.
No, but you don't have to always make the right decision.
Right. You can change.
You just have to make a decision.
Correct.
There's nothing worse than not making a decision, but I don't care if you're right. Just make the damn decision.
Just pick away and figure it out later.
You'd be surprised, but you're going to be right a majority of the time because that's just the way everything works. The favors go to those who make the quickest decisions, and for whatever reason, it just works out that way. So let's get into trading.
Yeah.
When did you actually start trading?
I opened first account when Tastyworks at the time, now Tasty Trade.
Had you done anything before?
2000. Yeah, I opened my first stock brokerage with Fidelity when I turned 18.
Okay.
To invest. There was never a day trade. Never try to speculate. Mm-hmm. There were no. I didn't do options at that time.
And what'd you do? Did just buy stocks?
Just buy stocks. That was back when you paid $10 a trading commission, commission every time just to enter and exit a position. So couldn't do much with that. But it was just to get in. My dad was in finance, so I was aware of it.
What's your dad do?
Now long since retired, but was in higher education finance.
Got it. So he was a professor?
No, on the administrative side. He has a PhD, but he was in the administrative side, run college finances, Cornell, some Pennsylvania schools.
Got it.
Finance.
So you were finance. Yeah, my dad was didn't believe in stocks, so it's very hard for me to make the transition because he's
had to relearn. Yeah,
smart guy, but didn't believe in the stock market. So your first venture was just kind of traditional, passive, buy a few shares here or there.
Yeah, put it in the mutual fund. The set it and forget it stuff.
Set it and forget it. Go to sleep for 45, 50 years and hope when you wake up it's going to be significantly higher.
Yeah.
Still have that account?
Still have the accounts.
Okay.
It's higher, through no efforts of my own. Mm-hmm. But you said at some point on one of your segments long ago that you don't know how you can sleep at night with that because you don't know what risk that has on.
Yeah, actually that doesn't bother me. Sleeping at night with a passive account I don't worry about that from a risk perspective. I worry about that from a know-how perspective. I worry about that.
There's no know-how.
There is no know-how. Exactly. I worry about that from what's going to happen in 20 years when you know just as much as you know today, and you haven't figured anything out. You haven't experienced anything. That's what I worry about.
Yeah.
So you start watching Tasty in 2012. Did you start trading options then, or you waited?
I'll say I paper traded.
paper
I
traded.
had
Okay.
the theory in my head because I was teaching at the time.
Okay.
My first introduction to options was actually academically. When I was going through my master's program,
Okay.
we had a professor who we had to draw out the option payoff diagrams by
Okay.
hand and understand how these things got put together. And something that just kind of clicked with me.
Something.
Yeah, like
something,
wait a minute,
yeah.
I can quantify the risk and I can hedge it in the light sense, not financially hedge, but I can compartmentalize it. And so then I said, all right, let me start to see what's going on. And through a friend of a friend, I was actually on a golf course of all places where when I first heard the name Tasty Trade and at the live show at the time, and started watching it, and you and Tony, and figuring out what all that chaos was about. But eventually it made sense once you got a few episodes in. And
Yeah, it's not something you just turn on and go, oh, okay, I'll just watch this for the rest of my life. Yeah.
well, so far we're in.
Yeah, no, that's great. And so you're messing around, you're paper trading, and you're kind of figuring it out, kind of. And you open one of the first Tasty Trade accounts. Was that the first time you ventured into listed options?
No, so because I had the Fidelity account for forever. I got approved on Fidelity to go through their options, and for those with Fidelity accounts, I'm sure they're quite happy there. But it was a process.
Don't even get me started.
And,
Yeah.
there's multiple levels. And
Well, they don't love me, so it's okay. I'm good. Don't worry about it.
then I traded a couple options at the Fidelity account with what limited authority and permissions I was allowed to do. And it kind of made sense, but it was not easy to do. There was some friction on the execution.
Did it bother you that you were restricted from doing certain things, or you didn't realize it at the time?
No, I very much realized it. It confused me. Why the restrictions were there. You had to interview to trade your own money in a way.
Yeah, of course.
And I'm sure you can make an argument from a firm perspective, but we won't go down that rabbit hole.
No, sure.
And that's when we were launching again, Tastyworks, the trading platform at the time, and I said, this. I like what I hear, and this is built by people who are going to click the buttons, so I'll give it a try and have it look back.
Perfect. Do you remember what you first did when you started out trading? I think that was 2017.
Mm-hmm. Yeah, opened the account, and I didn't do anything.
You didn't
Let the money sit there for probably a week or two.
Okay.
It's one of the things when you get the new car, you don't drive it right away.
Yeah, sure. You want to smell it for a while.
Yeah, you got to see how it goes.
Yeah, just admire it.
Yeah. And then it was trying to figure out a plan, right? Like $2,000 account. There's not a lot you can do.
No.
You can't do trade often.
No.
You can't have 30 positions on. And it really teaches you kind of a perspective on where and how to deploy capital, which you talk about a lot, to size a position with the risk you're willing to take on.
Mm-hmm.
You want a winner, obviously, but
sure.
Again, I'm trying to figure out a way to learn how to win, not necessarily always make the money right away.
That was kind of part of the whole genesis of Tasty was, before we can really focus on wealth creation, we need to focus on teaching people and showing people that, how you can actually have probabilities in finance that are real, that are, theoretical, that are practical, but that are not, not completely just made up.
Well, and you know certainly more than I, most people hear derivatives, and it's an instant association with gambling or high risk.
Weapons of mass destruction, as Warren Buffett once said.
It's a pretty famous quote.
Yeah.
And it comes from misunderstanding, right? They very much can be if someone's just going in and buying or selling a position that they're outsized to do. But
no question about it. But that is the nature of leverage and and risk. And if you want an opportunity to have a high probability of success, if you want an opportunity to have some asymmetrical upside, you're going to have to take some risk. That's just nature. So I kind of feel like you're one of those weird case
Not the
studies.
first time I've heard that.
What?
Not the first time I've heard that.
Your wife tell you that too?
Many times.
Okay, I've been down that road. I feel like you're one of those studies, though, in that you had lots of different reasons to trade.
Mm-hmm.
It wasn't necessarily about, like, you're not going to open a very small Tasty Bite accounts and think, you weren't thinking at the time, I'm going to turn this into, $10 million.
No, still don't think that.
Right. You're thinking, I'm going to teach myself how to win, and I'm going to teach myself about a little bit about I'm going to gain some know-how about financial markets. I'm going to learn about some of the intricacies of trading and strategies, and I can use all this in my businesses and my risk-taking, my teaching, all that kind of stuff.
Yeah.
Because the first time I met you had to be right around when we opened Tastyworks, or just after, and you were trading.
Mm-hmm.
And I mean, I didn't ask you any questions at the time, but it's just like, I remember now asking you, or you telling me that you were using some of the stuff that, I can't remember if you asked me a question, can I use some of the stuff in class? Because we have a lot of professors. Yeah. Or that you were using some of the stuff that we were doing in class, which I was like, that's awesome, because I want professors to change kind of the curriculum and bring it forward a few decades.
30, 40 years.
Yeah, 30, 40 years, exactly. And so I was so happy that you were doing that. And I kind of remember that, conversation. I've had that with a bunch of professors all over, and it's cool.
Yeah.
So let's talk about the progression. So the first couple of years, are you like, just kind of treading water?
Yeah. I mean, first year over year, I think I pretty much ended flat, like maybe $100 down.
Okay.
Which, for a $2,000 account, it's a dip. But I was just all defined risk, I'm pretty sure, in the first year.
Yeah, probably. Yeah.
Couldn't afford anything.
Yeah.
I think maybe the affordable undefined position at the time would have been like Snapchat, when it was, like a $8 stock or something like that.
You're selling the $7 put.
Yeah, exactly.
$8. Yeah.
Yeah, it wasn't the best decisions, but feeling out how to manage the position, right? And that's something that really takes time to learn, that process of how to properly manage.
Oh yeah, because anybody can manage a winner. It's the losers that where you start to get, it's the challenge.
Yeah. And if nothing, the early years teaches you to be humble pretty quickly. You don't know anything when the bell goes off.
It makes you second guess your genius. Like you've been told your whole life, you go through your undergraduate degree, your graduate degree.
It's humbling pretty quick.
Hey, my kid's a genius. And then all of a sudden you get humbled by the markets when you're like, I guess I don't really know anything.
Yeah, market doesn't care what your position is.
That's right. It doesn't care how smart you are. It doesn't care about your PhDs.
It'll go right through.
Yeah, exactly.
And so just learning to operate that environment.
Mm-hmm.
It's a big box that you're playing in.
Hell yeah, absolutely. So you kind of, for 2 or 3 years, you go sideways, spin your wheels, learning, grinding it up.
Couple wins, couple losses, trying to learn from the losses. What went wrong? Did I not manage it correctly? Did the market just go through me? Which happens? Was it too big a risk for what I put on, or did I just have the wrong position on? I don't know that there was a theme there. It was just trying to figure.
I hope you teach your students that sometimes the stocks win.
Yeah. Oh yeah. You have to, right?
Right.
You could have the absolute best position on, and there's nothing you can do about it. Like, you should have been right, which you weren't.
Yeah.
Probabilities are what they are, and 5% happens 5% of the time.
You could be playing poker and have 2 aces, and
we both lost that hand.
Yes, exactly.
and you still
lost that hand many times. Yeah. Right.
Yeah.
So
sitting on 20 at a blackjack table.
Yeah, exactly. Sitting on 21 and you push, and it's like, okay. So let's start getting into a little bit of the, when you started to turn the corner.
Yeah.
Like, did a bell go off? Did you figure it out?
No, it was comfort. I started to understand where and how I was taking on risk and what that meant in the position. You see the buying power reduction, which of course is
Sure.
the quantification of it, but what does it actually mean? How does that fluctuate?
Were you mostly trading equities or indexes or what?
No futures, no futures options at that time.
Okay.
It was would have been listed single stocks or ETFs.
Are you trading futures and futures options now?
Yeah.
Okay, good.
Yeah.
when you first, like, now we're up to like 2020, you've been doing this for like, let's say 3 years. You're still, you have a small account. You're learning. Now you're 3 years in.
Yeah.
It's like a graduate degree.
Yeah.
It's longer. And you're not being rewarded. You're not being rewarded monetarily, but you're being rewarded something else.
Yeah, I mean, I think I'm up probably a couple $100, maybe $1,000. I forget the exact numbers, but yeah, I've learned a process, right? Your analogy there to a graduate program, it feels about right. Like, you don't remember every class and every lecture, but you know you've learned something along the way, and things are easier. You start to know what position, what strategy you want to use, what environment.
And when you win, it doesn't matter. Like, even to this day for me, whether it's like, it could be $100,000 win, it can be a $1,000 win, it can be $100 win.
It's a win.
It's a win. I don't really care. It's a freaking win.
Yep.
And winning is part of this game. It's like, you have to have wins.
Yeah.
You have to keep reinforcing.
Absolutely.
All right. So what happened in 2020 where your return in 2020 was 160%? So what happened all of a sudden?
That was, the world changed, but in a financial market, the right place at the right time.
2020 was the pandemic.
Yeah.
So you were home.
I had 3 years under the belt, so I'll say there weren't really any first day jitters, right? I wasn't coming in. So watching IV spike across the market, I'll say knowing, for whatever that means, no one knows anything, but anticipating that, as with every other time in the market history, it's overstated. Being able to act on that, right? That's the 3 years of trading practice to go, all right, to deploy the tools that you have in your tool belt. And the returns came in. Great on a percentage basis, still a small account.
What strategies were you into then? Like, what were you doing in 2020?
Probably just wide iron condors at that point. Again, taking advantage of the just absolute massive spike in volatility across the market. Not being comfortable to go undefined in those.
Okay.
I was probably trading undefined at that time.
Yeah.
But with such high IV, going, okay, I don't know what I don't know here, and this is when the train comes out of the left side and takes it all out. So I'll put the guardrails back on a little bit for my own safety.
I like it.
But still, wide enough that was able to reduce some of the friction of the downside of defined risk strategies.
And then, so we move forward into 2021, and in 2021, you make half. Your return is half as much, but it's still 82% instead of 160. 160 is not realistic.
It's not realistic.
Yeah. But the next year, 82. 82 is not really realistic either, but still you did it.
We lived in high IV.
Yeah, we did.
And that's where, throughout that year, I started taking those guardrails off, went more undefined risks.
Okay.
And
so what percentage were you defined and undefined?
Prior to that, I'd say probably 90% defined.
Okay. And what about 2021?
Transitioning through the pandemic, I probably came into 50-50.
Okay.
And now maybe are in the 60-40 undefined being the bigger part there.
Got it.
And again, it's just...
Is that the primary change, or was there something else that year, 2021?
No, that's the primary change. And then, an accommodating market. Again, I can't overstate the IV.
After the whole meme stock thing in 2021...
Stayed away from that.
Yeah, well, that's good. But I mean, after that, there was a volatility contraction kind of for the rest of the year.
Yeah.
So it was a pretty good year. And then we fast forward to 2022. But 2022, you lost money.
Lost money. It's good to have a losing year, I think.
What happened?
It got too big.
The classic.
Well, I got too big in that I went into the futures market, and the futures market won.
And you didn't realize how big those products were?
Yeah.
Yeah.
I stand by it as an important lesson to have learned. No one likes a losing year, but...
What futures market in particular?
Yes.
Oh, yes.
Yeah. It just, I honestly think I bought back the downtick in a falling market to help to cancel the crash, and it went up after I sold.
Oh, thank you very much.
You're welcome.
Yeah.
Emotionally, that's what it feels like for sure. But that's all it was.
Do you know how many traders think they sold the bottom?
Yeah.
Like everybody.
Listen, it's
multiple times.
It's a fishing story. We'll never know.
Sold the bottom both
Somebody
times.
has to, right?
Of course. Everybody does. Everybody's watched the same movie. But That year you finished down 42%.
Yeah.
So you up 162, up 82, down 42. Did it shake you, or was it just like, hey, you know what, this happens?
Both, really. It was, all right, what happened? And you can pinpoint.
Because you had to be pretty cocky after being up 250% the prior 2 years.
I'll be honest, I wasn't, because the market's humbling. Right?
Okay.
You have enough losers where even when you think you're right and you're wrong.
How often are you trading by 2022?
2022, probably 2-3 times a week. Pretty light.
Yeah, that's not that much.
Don't have a lot of capital to trade with at the time. So a lot of it's watching and going, okay, do I have to manage this, or no, I'm just going to sit and see how this...
Did you get discouraged at all in 2022?
Oh, absolutely. Anytime you get discouraged at a losing trade, let alone a losing year. But take a step back and analyze where did the loss come from. Was it thematically an issue that I just had all the wrong positions on, or no? It turns out it's 5 or 10 positions that are just too big, and when they downdraft, they downdraft. There's nothing else you can do, and so you reset.
Everything you were teaching at the time come into question. You're like.
Probably, right? Yeah. There's that moment where you go, look, like I thought I had this under control. Again, not in a cocky way, but I thought there's a strategy I'm trying to follow.
Well, 2022 was also a pretty decent sized sell-off.
Yeah, and February, March is where most of the losses came from.
In a strange way, given your age and given when you had never seen, like, there hasn't been a lot of bear markets.
No.
2023, you make a comeback. And you're up 25% for the year, and it's a bounce back year. Anything changed in 2023? I mean, obviously the market rallied because you seem to be better when the market rallies.
I generally trade pretty market neutral.
Okay.
I'll inadvertently have some positive delta on, but we're talking plus
Small.
10. Yeah, I mean it tends to fluctuate around on pretty neutral.
Yeah, and are you your ratio of defined to undefined risk kind of similar?
Now I'm probably...
No, 2023.
Oh, yeah, pretty similar.
Okay.
The difference was stick to what I know. Don't play in the big markets.
So you didn't do anything different in 2023, except you stayed away from some of the futures trades that are a little bigger.
I got out of my own way in 2023.
Yeah.
Which is probably the easiest thing to do.
Yeah.
So, hey, I had a plan that was working. I spent a couple years learning this. Do it. Don't try and dabble too much.
Now, in 2024, where we are right now, you're up 73% for the year, which is great. Have you done anything different in 2024?
More expansion into undefined risk and more into the futures options market. Just
outside of ES?
Primarily still in ES, just more... staying away from the actual future itself, more just into the options.
Got it. And what kind of actual strategies are you using?
Primarily ratio spreads in the futures options.
And you're doing like 1x2s, 2x3s, that kind of thing?
Precisely, yeah. Nothing too huge.
Nothing too fancy, nothing crazy. Just
again, that buying power, putting it in that size account. Yeah, $1,000, $2,000 per position buying power.
Yeah, the ratio spreads are very capital efficient to the futures, more so than equities. Are you doing... what are you doing in the equity markets?
Chasing volatility, wherever it is. I'm product indifferent, right? If it's got, I am product indifferent as long as it's liquid.
Sure.
Which I think goes unsaid, but I'll say it nonetheless.
Yeah. No, that's great. What do you think you need to improve on, and what do you do different this year, if anything?
It's a pretty heavy question. Improve on, I'll say, is reacting just a little quicker on putting the position on. Sometimes I'll
You think about it too much?
I catch up in what's the best strategy I should use here, and sometimes you just need to put one on. And you can put a second one on if you think of a better strategy, but put the first position on.
Okay.
And I've probably missed a few moves for that, just waiting what I'm thinking.
I would think so.
Yeah. Just the hesitation is like, it should be this.
By the way, I hate when I hesitate because it always comes back to bite me. I'm always thinking about it. And
I've also had, improve on a couple losers that I didn't manage because I was waiting for the market to come back.
How aggressively do you manage?
As aggressively as I can. with the losers being the ones that I don't, and they come back and hurt.
How aggressive are you in closing your trades? Are you doing it, kind of like our mechanics show?
Oh, absolutely.
Early?
21 days.
Yeah.
And there's even times where I try to stay as close as I can to the mechanics, but if I have a winner who's coming, Tesla's a great example, coming into whatever announcement they had last week with
the
robo-taxi.
yeah.
I had a winning position on it, was nowhere near 50%, but I took it off. Like it wasn't worth the risk of it.
Do you trade any binary events?
Occasionally, but they probably hurt me more than they help me.
There's no question. You hurt me, so I'm just asking.
One of my biggest losers this year was in the bond position around binary events.
Okay.
Even it was defined risk.
Yeah.
It still hurts when you lose a defined risk trade.
I like it. That's a good way to end this. Michael, thank you. This has been a really great talk, and I think that, Tasty Nation getting to know you is just, it's a bonus for them, and it's a cool story. So thanks so much.
Appreciate it. Thanks so much for having me, Tom.